obviously we had the Fed during the week raising rates 25 bips and not scaring the pants off the market. So that's a good thing. Markets are trying to rally, bonds rallying. Is this it? Is it time to load up on all those beaten up small and mid-cap stocks which have crashed over the last couple of years? Not so sure about that, but I am sort of buying a few things. I'm allowing the rally to happen, but very aware of the resistance levels around here. So I just want to show you that and very rapidly show you the US 10-year bonds, just so you can get a sense of what's going on out there. So this is the monthly chart of the US 10-year bonds going back to 1987, going back a long way. The one thing I want you to note today is the length of time these really sharp spikes in yield happen. And look, this one went on a bit longer, but just noting how over and over these periods have occurred that have lasted a year or so and then rapidly unwound. So this is a chart of the yield. So when the yield is going down, the price of bonds is going up. And over the last year, you've known yield's gone up. Well, the price of those bonds is going down. So just making sure you understand that. And by noting that over the last few decades, just seeing where we're at now and considering what if we are in for a rapid decline in yields after a rapid rise in yields. And the first thing you're looking for is the monthly sell pivot. And that happened in the market last month, right here. So that's the first thing. And if we look back, it was a pretty good hint. When yields were rapidly moving higher, the first monthly sell pivot, even though the trend is definitely up on those moving averages, the first monthly sell pivot was a pretty good indicator to say, watch out, yields could actually drop from here a bit. And the other thing I want to point out is this range, which I have marked out for you. If you are watching these videos, and I hope you do watch them often, you'll know that I look at these ranges as they're set up, and then I'm looking at the midpoint of that range as the most important point. It's like a magnet around which the prices oscillate, where you've got false breaks of either edge, and then it heads back to that midpoint. So you can see that's happened over and over again. So here we are, big spike, monthly sell pivot in yield, falling back below the high of that range will really give targets back towards that midpoint, around 2.4%. And also, if it can fall, if yields can fall below the 10-month exponential, you can sort of get targets back to that 20-month, which is down around 2.5%. So if yields fall a bit lower than here in the US, through that sort of 3 to 3.2% region, you can actually create targets all the way back to around 2.4%. So we have had that sort of bullish turn, I guess, in those yields. The market certainly thinking the Fed's getting pretty close. Inflation's coming off the ball quite rapidly. Growth may be the next thing to go. And then the Fed may be chasing growth down. So rates could fall, but stocks could also fall at the same time. So be aware of that. But this is just a bit of a changing of the tide of the charts that I've been looking at. And I'm just interested by the fact over the last few decades, when you've got that hint that the momentum is changing, it can be quite rapid, the drop in yields. It certainly has been for a long time. But of course, you want to understand that if we do get a rally in yields that doesn't fall below that sort of 3% region, and then inflation disappoints and things do turn back up, yields race higher again, you know, the trend in yields is still actually up. So until we get the actual shift in trend, so until that 10-month exponential drops below the 20-month simple, the long-term trend in those yields is actually still up. So we're still a long way from that happening. So anything can still, you know, happen here. It could, the yields could drop a bit, but then still turn back up. So there's still a bit of work to do, but having had that monthly sell pivot now in the bonds, you know, a bit more bullish on these bonds, thinking that yields could actually drop a bit further and possibly a lot over the next 6 months to a year. Moving on to the S&P 500, and it's a very tricky situation, I've got to say. We're very close to being able to turn more bullish, thinking that prices could spike a bit higher. And the reason for that is if prices can bust through the 20-month moving average and also the most recent high of the current down wave. So just very quickly looking at the way the structure is moving, and I've shown you this before, lower high, lower lows. Now if it busts up through that most recent high, then it's saying that, you know, that trend could be under threat. So this whole area is just the point where the real resistance should be coming in. So if the downtrend is going to continue, there should be lots of resistance in this area. And if it doesn't get through there and turns down, then this downtrend is totally intact, isn't it? So the structure of that is still totally intact, where you have lower highs, lower lows. And that is all still possible, even with prices rallying for the last few months as they have. So it's right at that decision time. Are we going to bust through to the upside and spike a few hundred points? The resistance is a lot higher than here, about 300-400 points higher. So we could see a nice move, which could cause the long-term trend to turn up. So we're right at that point where it's on the edge of looking bullish. And we have the monthly buy pivot in place. So the first sort of step of things turning around has taken place. And prices are bouncing from the area where you'd expect them to if the very long-term uptrend is going to continue, I guess. Because if I'm looking at that 20-month moving average, when the trend is up, and I've decided, yes, the trend is up, I'm following the 3 standard deviation Bollinger Band below the 20-month. And I'm just saying that I really need prices to close on a monthly basis below there before I'm going to get seriously bearish. And you can see since 2010, I mean, it's never done that. Even though the 2020 sell-off spiked through there very quickly, it never closed on a monthly basis below there. And looking in the past, on that basis, you know, it didn't happen till then in 2001, and then the trend continued a long time, and that's when the crash happened in 2008. So, you know, it did actually find support where you'd expect it to, which is in the area 1 to 2 standard deviation on the Bollinger Band below that 20-month. And you can see in the past, just showing you all the examples of, you know, it's always good buying when the trend is up, to be buying in that area 1 to 2 standard deviation below. So that's where we found the buying support, monthly buy pivot. So, you know, you could say that this long-term 10-year uptrend really isn't in the big picture under threat yet, and we've seen the buying where we'd expect it, monthly buy pivot. So it could bust through, shift that into a long-term uptrend, and then carry on its way to the upside. So that's how the situation is. It is a very interesting sort of setup, but we're not there yet. I guess that's the final thing I'd say. I've tried to say this quickly to you, to not take up too much of your time, and it was quite a lot to explain. So hopefully it does all make sense. Basically, we're at that decision time post the Fed. Will they, having been a bit less hawkish, inspire the market to bust through this level and allow possibly a chain reaction higher? And if it doesn't happen and the selling comes in right now, it's got to come in pretty soon, and it heads back below that 10-month moving average, things can look terrible very quickly. So, it's a really tough to make too much of a call, I think, right here. I am buying it tentatively, buying a few stocks, seeing whether this monthly buy pivot can turn into something more interesting. But really important to understand that the long-term trend is down, and we're currently nudging up against very serious resistance, which, if it holds, could be the starting gun for another pretty serious wave down. So I hope that all makes sense. I tried to cover off a lot, and I'll leave it there. Hopefully we know a bit more next Friday or next week. I record these on Fridays, and I will come back to you then, and hopefully have a bit more to say about what's going on. All right, cheers. I'll talk to you then.